1010 WOLB Baltimore and WERQ FM HD3 Baltimore.
The views and opinions of the guest and host you hear are not necessarily those of the staff and management of Radio 1, its sponsors, or advertisers.
Welcome to the Our Legacy Matters show, where we'll discuss how to secure, maintain, and transfer wealth to future generations. I am your host, Attorney Sherry Fleming. Now let's tune in. Good morning, everyone. Welcome to the Our Legacy Matters show. This is Sherry Fleming again. I am a Maryland attorney, but not your attorney. So anything that you hear on the show today, I am going to request that you seek competent professional advice to really guide you along the process. And I'm going to ask for forgiveness today because I don't know if I'm getting sick or if it's my allergies, but I promise you I'm going to sneeze during the duration of this show. So today, I want to discuss a topic that comes up from time to time, not usually in the context of estate planning, but I do want to speak about it in the context of estate planning, and that is entrepreneurship. Business ownership, and in the context of estate planning. But first, let's define what entrepreneurship is. What is a business? And I am always going to use certain definitions because I feel like they matter more to me. And so I like to use the IRS definition, and that is the Internal Revenue Services definition, our federal government entity that processes our taxes. And so the IRS defines a business as any activity carried on for a livelihood or in good faith to make a profit. And so there are several factors that the IRS will use to determine whether or not a business enterprise exists. And that determination is really to determine whether or not you can and should be taxed on income that comes from that business enterprise. I want to make a point clear, and that is that you do not need to make a profit to qualify as a business, but you do need to have a profit motive or to be motivated to make a profit. So many businesses, when starting up, it can take several years for them to really turn around a profit. And for those of you who may not understand what a profit is the excess that you make from the sale of your good or service after you subtract what it costs to actually deliver the good and the service. So, for example, if I am baking a cake and I'm selling a cake, the baked good of a cake, the good is the cake. Everything that I use to make the cake, the flour, the ingredients, the pots, the pans, the oven, the manpower, the labor, the decoration, the boxing, the advertising and marketing associated with the cakes that I'm baking and selling. All of those things are the cost of doing business, the cost of what it takes to sell the cake. And so my profit is going to be the amount left over after I've sold all of the cakes for a particular time period, the amount left over after I subtract everything that I expended to make and sell the cakes. Okay. And so depending on what your good or service is, you can imagine if you're in business that it can take some time to actually have a profit in your business because there are a lot of costs associated with starting up. So if you heard of the term startup costs, there can be a lot of costs with starting. And so it can take you some time to make a profit. But for the purposes of this discussion, we are talking about a business endeavor that you are undertaking with the goal to eventually make a profit, to have some additional income coming in. And so when you have a business, that business can be part-time, that business can be full-time. You can own and operate the business as well as own meaning you own the business, operate the business meaning you work in the business, or you can just own the business and have other people work in the business. There are a number of ways that business can be conducted. However, I give this full detail because in my line of work, particularly during COVID, I found that there were a lot of individuals who were engaged in a business enterprise, who would be classified as entrepreneurs, people who became innovative business owners. And the reason why I'm talking about this in the context of estate planning is because during COVID, and this has happened outside of COVID, but I think there was an avalanche of issues during COVID where you had business owners and entrepreneurs who had encountered issues in continuity of business, due to disability or death, and one that was unforeseen and one that they did not prepare for. And so again, I want to have this conversation so that if you are listening today and you consider yourself to be a business owner or entrepreneur, or maybe you don't consider yourself to be a business owner or entrepreneur, but somehow you are making money and you have income coming in from a good or service that you provide to the marketplace, guess what, my friend? You are an entrepreneur and you should consider yourself as such. And so part of one of the baseline issues that I saw during COVID is that there were a lot of individuals who did not consider themselves to be entrepreneurs or who did not consider themselves to be business owners. And so they really didn't do a good job in preparing their client base as well as themselves for disability and in some cases death. So there are several types of business entities that a person could have. The entrepreneur or business owner who doesn't realize they're in business more than likely is a sole proprietor. And this is a person who is just going out, selling a good or service and receiving income in. And so there is no formal entity filings. There is no formal anything that's done for this particular type of business ownership. This is me deciding that today, this is me in college, actually. In college and in high school, I did hair in all sorts of ways. And so I did hair, I made money, and I went to the movies. I spent the money as soon as it came in. Sometimes I saved it. In that vein, I was a sole proprietor. It was just me. And then my best friend and I had the audacity, the boldness to say, you know what, we're going to do hair together. We're going to make up flyers. There was so much copyright infringement involved in this. We would take Hype Hair magazines. Yes, I am dating myself. Some of you listening may actually know what I'm talking about, but we would take hair magazines back when it was a thing, and we would photocopy them and redact all of the information around the photo and then put our business name. I think our business name at one time was like Styles of Elegance. And we put my grandmother's home phone number on the flyer and hung the flyer around our neighborhood. And lo and behold, we were in business doing hair out of my grandmother's basement. She permitted us to do so with no fee, and I thank her for that. And we did that all for a good amount through the latter years in high school. So in that example, we were a partnership. We were two people coming together for a business enterprise. And we had rules for the way that we made money. We had rules for the way that we purchase products that we use in common. We were young people really making money hand over fist. If you went to church with us, all of the church mothers and all of the elderly women in church, we did their hair. We did, my grandmother was an Eastern Boston Star, and my grandfather they both were Elks, and we did all of those. When it was time for a dance or a cabaret, we did everybody's hair, and we made money hand over fist. And we were minors, but we were a partnership in that example. No formal filing required. In the state of Maryland, there is a formal filing for those who are going to partner, but the one partner is just going to be an investor, and that's called a limited partner. And so Maryland does require a formal filing for that. However, usually no formal filing. Other business ownerty types, you have a limited liability partnership, which is a little different from a limited partnership. You have a limited liability company, most people know as an LLC. You have corporations, and corporations can be stock, non-stock, tax exempt, professional corporation, closed corporation, religious corporation. And to be clear, the business entity that is permitted to be formed is governed by state law. Again, this is one of those areas where you have to know the law of the jurisdiction that you're living in to determine whether or not the business entity you would like to form is available. And there are many reasons for forming the different, selecting a business entity. You could have tortious liability, that's personal injury liability, where someone is suing you because maybe there's a product defect or there's some type of injury that resulted from the good or service that you provided to the marketplace. There's contractual liability when you are in business with vendors and you use vendors and you use employees, you contract with different parties for the sake of doing business, the business that you're in. And let's say something goes awry with the contract. So you have contractual liability. And then there's always tax liability. And that is what you owe, the cost of doing business, the tax that your business will have to pay for being in existence and delivering a good or service to the marketplace. So when you're trying to determine which business entity to select, those are just some factors that you have to consider. And I bring those different business entities up just in explanation, because when you are looking at business continuity, how does your business continue in the event of your disability or death? The tools that are available to you to use, the legal tools, are different based on the type of business entity that you have. So, for example, business continuity is a little easier to talk about in the context of a corporation. And for those who say, oh, I have a C corporation, I have an S corporation, those are tax designations. When I hear people talk about this, it informs me of the level of information you have. A corporation is a corporation. Looking at C or S corporation, really is a tax determination. But for the purposes of this discussion, I'll just use the term corporation. And so if you have a corporation, there is at least one director or a board of directors who is in charge. They're in charge. You have shareholders who are in charge. So you have these groups of individuals, and your corporation is governed by what's called your bylaws. That's your governing document. And that document, if done right, should really already contain the information necessary to provide the business owners and managers direction about what should occur when one or more business owners become disabled, or should they expire. And so corporations, when we're having a conversation about business continuity and business succession, it's an easier conversation, because the business formation documents, when forming a business, you should be thinking a little bit more deeply. What I see in practice is that we have a lot of individuals who have limited liability companies or LLCs, who have partnerships, or who are sole proprietors, where there isn't as much policing in the documents that you have to form. So because there isn't that the policing of those documents, or those documents aren't regularly requested for different things, I find that most business owners don't have them or don't know that they should have them. And so, for example, when you form an LLC, you file your articles of organization with the state of formation. In this state, we're going to talk about Maryland. And so you file your articles of organization. I find that most business owners, that is the only document that they may have. Not realizing that with an LLC, you should also have what's called an operating agreement. And an operating agreement really outlines the rules and regulations for managing and running the business. And so I find that LLCs with multiple members is the name for those who are in management and typically ownership of an LLC. When there are multiple people, there may be an operating agreement. However, there are a lot of single member LLCs, just meaning one person goes, files, and starts an LLC, and boom, they're in business. And those owners don't realize that they properly should have this operating agreement that governs the way in which they do business, even if they're the only person in charge. And so the same is true for partnership. The same is true for sole proprietors. I give the example of me and my best friend. We did not have a written agreement, but we did have a way of understanding with one another that we could have written down if there were some issues that would arise. And so the written documents that you have for these businesses, they really should, one, you should have them. And two, they should serve the purpose of outlining how the business will end or how the business will move forward in the event of disability or death. And so what COVID showed me as a practitioner is that there are a lot of people who are moving forward, not using professional advisors. This was probably 2 shows ago when I tried to plead with everyone to get a professional advisor in some way, somehow. There are a lot of people not using professional advisors, not seeking professional help, who are going out and starting LLCs for various purposes. I see a lot of people in the real estate investment world who are doing this. I see a lot of people that just go out and grab an LLC because they think it's the thing to do. It's almost like the new outfit or the new Gucci bag or the new fun thing to have, not realizing that you are opening yourself up, availing yourself to all kinds of liability in a very big way. And so for those who are in business, you are selling a good, you are selling a product. How do you intend for the business to move forward if you catch the flu? What do you do? And I speak from example because I've been in business as a business owner through pregnancy, through, I mentioned last week, the death of my mother. These are life events that have occurred to let me know that either my business practices were working and in place or they were not working. Okay, so being in business during pregnancy, when I had my youngest child, that was the first time that I realized that I really did not have the practice and the procedures in place to really allow the continuity of my business. That's when I realized, before having my third child, it was just me. I did not really have an administrator. I did not have a paralegal. That was one of the life events that said, wait a minute, Sherry, you're doing enough business and you have enough exposure and liability to the point where you need help. You need to pay people to come in to be able to manage certain aspects of your business. Not because I was unable to juggle. I was actually juggling everything really well. It was because if something were to happen to me, who would be the one to make the phone calls? Who would be the one to really know the ins and outs of my business to keep the wheels on the bus? So for practitioners, and I'm sure other professional industries have this, we have the ability to, if you're in solo practice, particularly for your malpractice insurance, one of the things they ask for on your insurance is who is going to be in place in the event of your disability. For my malpractice insurance, I had to identify another attorney who would be able to have oversight over my practice, even if they didn't practice with me every day, but have oversight of my practice in the event of my disability or death. So that is built into most professional industries where insurance is required because it's a question to obtain insurance. But what if you're not in a professional industry that requires a licensure? This actually came up with my hair braider. I get my nails done by an entrepreneur. I don't go to big shops. I go to individuals who are in business, who do business very well. So my nails are done by a wonderful young lady. My hair gets braided, and I have a braider who's a wonderful young lady, as well as someone who washes and styles. I have different people for different things, different folks for different strokes. And so this came up with my hair braider because she offers a subscription package, which is a new way that a lot of businesses are making money and really solidifying their or regulating their income. And so the way that a subscription works, like any other subscription, I pay one price for the year, and that price comes with a certain amount of times that I can get my hair done. In this case, it's 4. I can get my hair done 4 times a year, unlimited styles for a set price. Works for me because my hair is braided half of the year. And so my braid appointments are scheduled from now until October. What came up in conversation, because anyone who any entrepreneur who provides me a service usually gets free legal advice because I can't turn it off. But what came up the question that I asked her was, well, wait a minute. If I'm paying you in advance or in 2 deposits for these services, what happens if you get sick or become ill, or you're unable to meet the demand or meet my need? Let's say you do 2 of the hairstyles, 2 of the appointments, but the other 2, life happens and you're unable to do it. How do we work that out? And so I was able to kind of talk to her to really help her develop her business policy, because she had never considered. I am the sole person. She is the sole person who puts her hands in our head to be able to provide us with the service of hair braiding. I don't want someone else to do my hair. If I wanted someone else to do my hair, I would go to someone else. I go to her and I pay her price because of her skill, because of her judgment, and because of her trustworthiness in doing my hair over the course of years. So what happens should she become disabled or expire, and I have already paid her the funds for 4 hairstyles over the course of the year, but I didn't get my other 2? And so that is something that I want any entrepreneur that's listening to this to think about. I was able to work with her to develop a plan to make sure that she's not shortchanging her clients or herself. And that builds trustworthiness when clients feel they are not being ripped off, when they feel as though there is a sure way that they are going to get the bang for their buck, they are willing to pay. And so I believe that this plan that we've developed will allow her to get more people on subscription so she can regulate her income as a hair braider and regulate her household expenses with this subscription plan. But it would not have worked if she wasn't able to build trustworthiness with her clientele to be able to say, listen, I have a way that you can either get your money back or get your hair done if you are comfortable with someone else doing doing it. And so we were able to develop a business continuity plan and the beginning steps of a business succession plan. Because what does succession look like should there be a premature death? What happens with your client base? If you have a pool of clients and you have their confidential information can be their phone number, their address. You may use a gloss genius for all of my personal service folks. There are some people who use acuity scheduling. These online fintech apps allow you as a business owner to save a person's card information, to save their address information, their phone number. What happens to all of that information that you have collected for your client base and you become disabled or transition and you're unable to provide the service? Who is in charge of these things? And this is where there is a convergence of entrepreneurship and estate planning, because guess what? Your estate planning tools for my sole proprietor buddies, for my partnership buddies, for my LLC buddies, and even for my corporation shareholders and directors. Your estate planning tools, if you do not have bylaws, if you do not have an operating agreement, if you do not have any other business document to provide detail, your estate planning tools are going to be the things that are used to allow your business to continue. So we talked about a durable power of attorney for financial matters that allows you to appoint an agent in the event of death or disability, any event of disability specifically, to access your bank accounts. Well, guess what, business owner? This same agent that you name, if you're using the statutory power of attorney provided by the state of Maryland, and quite frankly, if you're using any decent power of attorney, it should, unless you intended to limit that person's authority, a durable power of attorney will allow that named agent to control your business. Do you want that person controlling your business? Does that person have the capacity to control your business? If you have a premature death and you expire, your last will and testament, the personal representative in other jurisdictions, the executor that you name, in most jurisdictions, the courts will permit that person to wrap up your business or continue your business. Is that the person you want to continue your business? So for all of my entrepreneur buddies, all of my business owners, I want you to really consider, when you are doing your estate planning documents and you are running your business, don't get so busy in your business that you forget to protect it with the proper documents, that you forget to name the proper people. And in most cases, the people that you want handling your personal business or your personal matters, shall I say, are not the same people that you want handling your business matters. So you may need to have two separate sets of documents to control both sides of your life that work together and don't contradict one another. And so if you find yourself in this position, I do want you to get the proper professional services. Please go to my website, sherryfleming.com /Our Legacy Matters for more information. You can reach out directly to my office, but at 410-316-6800. Business succession planning is a thing. Business continuity is a must. And I want you to do better for yourself, your business, your customers, your employees, as well as your family members who may be affected by these decisions. I look forward to connecting with you next week. Your legacy matters. Thanks for listening to the Our Legacy Matters show. Connect with me, Attorney Sherry Fleming, at I am Sherry Fleming on all social media platforms or at sherryfleming.com/Our Legacy Matters, or you can call us at 410-316-6800. Make sure you tune in next week for another discussion because our legacy matters.
The new 1010 WOLB with talk in the day and soul at night.